On a gray October morning in 2001, Enron's gleaming glass tower in Houston looked the same as it always had. Inside, traders barked into phones, stock tickers flickered green, and executives smiled for cameras. To the outside world, it was the very image of corporate success. But behind those mirrored windows, the truth was already collapsing. Billions had been siphoned into a maze of fake partnerships and accounting tricks, hiding losses so well that Wall Street, regulators, and even employees kept believing the dream. This wasn't just one company's downfall. It was a masterclass in deception, showing how numbers can be twisted into stories the world wants to hear. And the unsettling part? Many of the facts you believe about money, security, and value today are built on myths just as fragile. To see how these billion-dollar lies take root and thrive, we have to start long before Enron's last day. The seeds of Enron's deception weren't planted in its glass Houston headquarters. They were sown decades earlier in the culture of American finance. In the 1980s, the US government began tearing down regulations in energy markets. The theory was elegant. Let supply and demand dictate prices, and the market would reward efficiency. In practice, it was a gold rush. Electricity and natural gas, once boring utilities, became commodities you could buy and sell like stocks. Whoever controlled the flow of energy and the information around it could shape the market. Enron was built for this new world. Formed in 1985 through a merger, it was originally a pipeline company. But the real transformation came when Jeff Skilling arrived. A Harvard MBA and former McKinsey consultant, Skilling had the confidence of someone who believed he could outthink the system. His big innovation was mark-to-market accounting. Normally, a company only counts money once it's earned. If you sign a contract that will pay over 10 years, you recognize the revenue gradually. Skilling flipped that. Under mark-to-market, Enron could book the entire projected profit from a deal the day it was signed, even if the cash wouldn't arrive for years. On paper, this made Enron's growth look explosive. In reality, it was like adding imaginary dollars to your bank account based on a guess about the future. At first, it worked beautifully. Wall Street analysts swooned. Reporters crowned Enron America's most innovative company 6 years running. Its stock climbed from under $20 to over $90. Inside the company, the atmosphere was electric. The smartest, most aggressive employees were rewarded. Mediocrity was punished. Skilling's rank and yank system fired the lowest-rated staff each year. Pressure was constant and moral lines blurred. But projected profits only work if reality never disappoints. Deals had to get bigger, projections bolder. If a project faltered, it had to look like a win. That's where Andrew Fastow, Enron's chief financial officer, became essential. Fastow built a labyrinth of private partnerships, shell companies with names like LJM1 and LJM2, that bought Enron's struggling assets. In truth, they were just moving bad deals off the books while keeping the illusion of profit alive. The trick often used Enron's own stock as collateral. As long as the share price stayed high, it worked. If it fell, the whole structure risked collapse. And then came California. By 2000, the state's energy grid was deregulated but fragile. Enron traders discovered they could manipulate supply to drive prices up. They gave their schemes names like Fat Boy and Death Star. On recorded calls, traders joked about stealing a little old lady's check and laughed about wildfires knocking out transmission lines. While millions sat in the dark during rolling blackouts, Enron made hundreds of millions in trading profits. It was audacious. Yet for most of the country, Enron's image stayed clean. That's the thing about billion-dollar lies. They thrive when the truth is too complex, too inconvenient, or too painful to face. Pressure mounted. Analysts began asking sharper questions. In August 2001, Skilling abruptly resigned, citing personal reasons. The stock slipped. In October, Enron admitted it had overstated earnings by $586 million. A month later, it revealed billions in hidden debt. By December, Enron had filed for bankruptcy, erasing $74 billion in shareholder value. More than 20,000 employees lost their jobs. Retirement accounts packed with Enron stock were wiped out. The collapse shook corporate America. It triggered congressional hearings, criminal trials, and sweeping reforms like the Sarbanes-Oxley Act to tighten financial reporting and punish fraud. But Enron wasn't an outlier. It was a symptom. Fast forward to 2008. Lehman Brothers, once a pillar of Wall Street, collapsed under the weight of toxic mortgage-backed securities. Banks bundled risky home loans, slapped them with top ratings, and sold them as safe investments. It was the same pattern. Inflate the numbers, hide the risk, keep the confidence game alive. When the housing market cracked, the global financial system shook. Or look at Theranos in the 2010s. A Silicon Valley startup promised to revolutionize blood testing with a device that could run hundreds of tests from a single drop. Investors poured in hundreds of millions. The board included cabinet members, generals, billionaires. Behind the curtain, the technology barely worked. Employees were silenced, data was faked, and results were manipulated to match the vision. Different industries, same playbook. And then there's crypto. In 2022, FTX, one of the largest cryptocurrency exchanges in the world, imploded. Billions in customer funds vanished. The company's founder, once hailed as a white knight of crypto, was accused of using customer deposits to plug holes in his hedge fund's balance sheet. It was Enron with a digital twist. Opaque financial structures, cult branding, and a public desperate to believe in a new kind of wealth. So why do we keep falling for it? Partly it's psychology. Once we've bought into a story, a stock, a product, a leader, we protect that belief. We seek confirming evidence and ignore red flags. Psychologists call it confirmation bias. Investors call it staying the course. In the moment, it feels rational. In hindsight, it looks like blindness. Then there's FOMO, the fear of missing out. No one wants to be the person who sold too soon, or worse, never bought in. The dot-com bubble of the late 1990s was powered by this. Companies with no revenue, no product, sometimes not even an office, were valued in the billions just for having com in their name. The logic wasn't about fundamentals. It was about not missing the rocket ride. Billion-dollar lies thrive in this environment because they tell us what we want to hear, that our bets are smart, our leaders visionary, and our future secure. They don't just manipulate numbers, they manipulate hope. Enron's employees weren't all in on the fraud. Many were true believers. The same was true at Lehman, Theranos, FTX. People sacrificed nights, weekends, and health for companies quietly engineering their own destruction. And when collapse comes, it's not just numbers. It's a retired couple watching their pension disappear. A mid-level manager losing both a job and an identity. An intern 6 months into a dream career carrying a cardboard box out the door. Here's the uncomfortable truth. You might be holding a piece of one of these stories right now. Maybe it's a hot tech stock. Maybe it's a crypto token promising guaranteed returns. Maybe it's a startup whose founder you admire because they think different. The warning signs? A business model that demands endless growth at impossible rates. Leaders allergic to transparency. Bad news always spun as good. These are the fingerprints of a billion-dollar lie in progress, and history shows they don't vanish when exposed. The tactics reappear, adapted to new markets and new technologies. In the 1700s, Britain was rocked by the South Sea Bubble, a trading company inflated by promises of untold riches from South America. Shares skyrocketed, fortunes were made on paper, and then reality struck. The stock collapsed, taking much of the British economy with it. 3 centuries later, the mechanics are eerily familiar. Billion-dollar lies aren't just about greed. They're about belief. And belief, once lit, is hard to extinguish. Which brings us back to you. When the next big story arrives, whether in finance, tech, or something yet unknown, you'll have a choice. Will you see the warning signs, or will you believe the numbers because you want them to be true? Before we answer that, we have to rewind even further. Because the history of billion-dollar lies didn't start in Houston, Silicon Valley, or Wall Street. It began centuries ago in markets and schemes so audacious they make Enron look almost quaint. And those early cons hold the blueprint for every financial illusion we still fall for today. On that October morning in 2001, the people inside Enron's tower thought they were working for a company that had changed the rules of the game. In truth, they were living inside a story, one so carefully crafted, it blinded even the people telling it. That's the danger of billion-dollar lies. They don't just trick markets, they trick minds. They wrap themselves in success stories, in numbers that look too good to question, in leaders who seem too confident to doubt. And they survive as long as belief does. History shows the setting changes, but the pattern doesn't. From the South Sea bubble to Enron, Lehman Brothers to FTX, the engine is always the same. Greed pushing the lie forward, fear keeping it alive, and hope blinding us to the cracks. The truth is, you'll see another one in your lifetime. It might be a breakthrough technology, a can't-lose investment, or a company with a mission so inspiring you want it to be real. When that moment comes, remember this: the bigger the promise, the deeper the shadow it might be hiding. Because the most dangerous part of a billion-dollar lie isn't the money lost when it falls apart. It's the years we spend believing it. So, what's the biggest financial myth you still think might be true? Drop your take in the comments. And if you want more untold stories of money, power, and the people caught between them, hit subscribe. The next one's already unfolding.